WTF? Why is everything selling off? Here we're looking at NVIDIA, which had its biggest daily decline in about a month. And the pattern here is not bullish. But why did we sell off? It's pretty simple. The US is reining in AI chip sales to the Middle East by NVIDIA and AMD. They are worried that the technology is going to get to a certain country over in Asia. And this is after we had a really bad report from Salesforce yesterday, dragging down this whole group. And now it's pretty obvious. NVIDIA is having sympathy selling over to names like Microsoft and others. But there's actually names catching a bid today. We'll come back and talk about this a little bit later. But pay attention to the pattern on NVIDIA because this is where I'm starting to get a little bit more worried. Why? Gaps. Here we got more gaps. Then we got a bearish engulfing daily candle. Then we got a bearish engulfing daily candle. Then we slowly go sideways to down and lose the 50 DMA. Now pay attention to the S&P. Why? Well, first of all, we lost our previous top at 524, which was really important. But look here, we have a bearish engulfing daily candle. All right. And what's going to happen next? Well, if we repeat, we're probably going to lose that 50 DMA, which would mean that if we're starting to sell, we want to be receptive to these different gap zones. But more importantly, we talked about how 524 was the gateway for the bears, and they've now claimed it. We've lost our uptrend. So do we start to fight this? That's the really big question. So now that we're back below this key area at 524.61, this basically means that we have a weekly lower low and we're currently below that low. That's not good. It's not bullish. I'm not going to try to pretend like it is. So what does that mean? It means we got to think about if this is the gateway for the bears, what is going to cause follow through selling? Well, us falling back into fear would be a pretty good start. Only one more point and we're right back down into fear. It seems like people are selling first and asking questions later. We've also talked about how we had these inverse signals for the Dow Jones, the S&P, and the NASDAQ, and they provide a window of opportunity of roughly 3 weeks. What's this right here? Well, it's roughly 3 weeks. What was that bearish pattern I showed you here on the daily chart for the fade? It's roughly 3 weeks. 1, 2, 3 weekly candles. Oh, it's been delayed. We've been seeing this pattern happen since roughly the 20th, but now it's starting to pick up some steam. We can note that since we got our dog alert, we're up by roughly 4.5%, which means the Dow Jones is actually down by about 4.5%. Yep, look at that nasty little sell here, right? Boop, 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 boop. Got gaps here. Man, that does not look good. Can't pretend like it does. And the reason why I'm also a little bit worried about AI is because Salesforce really dragged down a lot of stocks yesterday. We can see that pretty clear here, right? Into now got dragged down by 10%, 12%. PanW, right? Oracle, into Adobe. Man, it really, really bled. So is NVIDIA going to do the same thing to other AI companies? Well, Mongo didn't do a great job today. So they just had earnings down 7% on the day, but negative 23 in after hours. That's a third of the company. Poof, it's gone. Why? Tells us right here. We had a slower than expected start to the year for both Atlas consumption growth and new workload wins, which will have a downstream impact on the remainder of fiscal 2025. What is that? That's a guide down, right? They just guided down on earnings. And the stock actually beat, right? They beat earnings here. They beat by 33% on earnings, and they beat on the top line. But the stock got pummeled, right? Crushed. Oof, right? So is this going to cause more selling into tomorrow? Well, certain names are already down. Look at Datadog, down 4% in after hours in sympathy. Ouch. So these forward guidances really matter. And what this really reminds me of is this here, which I shared with you a little bit earlier. It's only a couple days old. So I think we went through it yesterday and then on Monday. We are still in the hardware moment for AI cycle, which is why this news regarding NVIDIA and AMD is so important. If we now go look here to AMD on the one-day chart, it actually managed to close up today. In after hours, it's down a little bit, but at least for now, it's able to shake off some of that news. There's only 2 companies listed here, NVIDIA and AMD. They're telling you these will be the leaders when it comes to hardware. And not all stocks are created equal. What's so incredible about this is that AMD is actually still currently above its previous all-time high. Is it going to hold into tomorrow? Is it going to act as support or resistance? Hey, I wish I knew, right? I'm just here to tell you what I'm seeing. I'm still bullish on AMD. I think it's going to go up. And just before we go further, I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up and subscribing to the channel, I would greatly appreciate that. Thank you ahead of time. So if we pick up the story here about hardware, Why this will be particularly important is because I want to see what the mainstream news is talking about into the end of the week, but really into WWDC, or the Worldwide Developer Conference for Apple. Why? They're planning an AI-based Siri overhaul to control individual app functions. The feature will be at the heart of a renewed Apple push into AI. Idea is to operate features within individual apps using your voice. Hey, that sounds pretty cool, but is it hype or is it real? Hey, we're going to find out. Apple is still a very big company, even after this decline. If we go no group, Microsoft is currently here at roughly 3 trillion, got a little whack. We look at Apple, currently worth 2.93 trillion. And NVIDIA got a little bit of a hit here, down to 2.7. So each one of these 3 companies is really important. But look, Apple's green today. Why? I think people are rotating. As I just told you, people are selling some stuff to buy other stuff. The Russell, financials, energy, utility, the New York Stock Exchange, regional banks, insurance in Germany. So, like, what's going on here? We talked about yesterday on the tale of 2 markets. That's really what it's coming down to here. And I think part of the story here is that, let's just go back. Dell tanked too. I forgot about that one, right? Oh my goodness, right? Dell got a huge crush here too, right? They beat earnings, but the stock is tanking. Beat on top and bottom line. I think they even guided up. Stock is down by 13%. This halo around the AI trade is starting to get a little bit cracked, right? People are selling first, asking questions later. And my really big question here is whether or not we're going to continue to see rotation or if we're going to see net selling. What this basically means is when we see big blocks red and the rest kind of green, they're selling some stuff to buy other stuff. But if they decide they don't want to buy anymore, the map's going to look a lot more like this. It's going to look a lot more like the last 1 week where, yeah, everything's red. This is not rotation. Why? One stock is not going to suck up all of the selling from other names. So this looks like net selling. We want the map to look like this if we're bullish. Why? Because the bulls got their gateway here. They're now potentially going to be able to capitalize on this. If we fall into fear and this momentum trade for AI starts to fizzle, right? A quarter, that's $50 billion. Poof. What about, we looked at the other names, Mongo and Datadog. Man, these stocks are getting hit here. What are they going to say into the future? Is it still just really a hardware company? Hardware moment, sorry. Well, then NVIDIA and AMD have to stand up and they have to push. And Dell is a hardware company, so I'm really not sure. This stock crushed it into earnings, but we'll have to see what the hangover does tomorrow. What's also really notable is that there were some big gainers today. Let's look at a few. So we had GPS, which is Gap. Man, this stock is doing pretty good here, right? Up by 20% in after hours. And we saw large rotation today. Let's look at a few names. We got AI up by 20% on the day. Whoa. Look at another one here. Burke, right? Birkenstock. You watch the Barbie movie? Yeah, she was wearing Birkenstocks. That's 12% higher. Whoa. Look at Best Buy. Best Buy. Who shops at Best Buy? Well, it doesn't seem to matter. The stock is up by 13.5%. And then another hardware company, just like Dell, boom. I think it's its biggest day either on record or in recently. This is HPQ. They raised their full year guidance for hardware, which is what we just talked about here, computers. So what is this? It just means there's a lot of rotation happening right now. Names that have run really hard, they're selling those and rotating into other sectors. So we really want to be mindful of what this means because I was talking about the May monthly close, and this is really important. But let's finish off the story here. So there's a few other things that happened today. Let's look at the weekly data because tomorrow we got core PCE, and these numbers got revised. Earlier in the week, it was 0.2. Now it's 0.3. And headline core PCE is going to be at 2.8. I don't know what the number is going to come in at for actual. All I know is that I really care about the reaction. Whether it's green or red, I want to see whether or not we close above or below 524 and 525. These two numbers here, but really 524. And I'll briefly explain the reason why in a moment here. But what I really want to show you is that we already had these warning signs. The Dow Jones was an all-time high. This is back to May 4th. We can look here to, what's this one here? The New York Stock Exchange. That one was up again today. We had RSPT, or equal weight tech, and then also Germany, or the DAX, versus these dogs, right? Look at these terrible charts. Here we got RSP, here we got healthcare, here we got XLF, all looking like double tops, and we got CAF. If we do a quick little update on those, let's pop over here to a monthly chart. Let's have a look here at XLF. Yeah, this doesn't look good. So the S&P 5, or pretty much the five good companies, like the big blocks here. One, let's go back to no group. One, two, three, four, five. Let's call it six. The six, right? Magnificent Six, Beautiful Six, whatever. It's those stocks against everyone else, right? These stocks don't look great here. If we look at a few more just really fast to see a pulse on where these are going, let me just get back to my window here. So I have this one. So we got XLF. Yeah, that's a failed breakout. We've lost our previous high, and we're now back below our previous all-time high. So we're below here, and sorry for the noise in the background if you can hear that. I'm downtown. I'm sorry. If we look to XLV, what do we have? Well, it's basically the same thing. It's an inside bar, but it does look like a double top. If we go here to a line chart, what does it look like? It doesn't look good. It doesn't look terribly good to me. Then if we look over here to RSP, or equal weight S&P 500, hey, it looks a little bit better, but it's below the previous top. And I don't like that inverted hammer here. It doesn't look sexy to me. All right, so there was one more thing I wanted to go through here. Oh yeah, S&P. So if now we go to S&P 500, I did talk about this note here, but watch the video at the very end if you want more context. I talked about how we want to save 52472 and 52461. Now that we're below 524, the significance here is that we have a pattern called a failed breakout. So tomorrow's going to be the last day of the month. We're still going to get this this inflation data, and it's going to be really important. Why? Hey, if we close above or below this area, I'm going to be making decisions based on what happens. I'm assuming that other people will too. Are they going to keep rotating, or are they going to start just net selling? Really, really, really important. Very last thing here. What we want to think about is, what does this GDP revision lower really mean? Well, I think it kind of means that there might be stagflation. That's why I was actually quite surprised to see small caps getting bid up, financials getting bid up, utilities getting bid up, the New York Stock Exchange getting bid up, regional banks getting bid up. Why? Well, because we were supposed to get 2.7, according to the Federal Reserve, St. Louis Fed. It was supposed to be 2.7% GDP. Came in at 1.6, and that wasn't low enough. They revised it down. Sounds like the job numbers where, yeah, nice big number. Then they revise it down. So this 1.3 is fairly soft because inflation's running at 2.8. So 2.8 is greater than GDP, which means this is potentially how stagflation could start. As of right now, we're getting a strong print for Q2 at 3.5. We're going to need to see some GDP growth to shake off these concerns in order for us to go higher. Very last thing here, if we look at the S&P on the daily chart, we already talked about the significance of this area. So what I'll be looking for next is how we battle these next key gaps. We've now filled this one here, and we got 52537, 525.2. So technically, we have about an 11-cent gap here. I'm going to call that close enough, though. So what I'm looking for is whether or not we make more progress towards this 50 DMA, as we showed you at the beginning of the video, because the bearish engulfing candle and failing to make a higher high was the big clue. Just watch here really close. So bearish engulfing candle, then we form a small downtrend. We already have our small downtrend here. All we got to do is keep going lower, and we're probably going to be looking for a bounce on the 50. If that doesn't hold, look for the gap fill, potentially even lower. So that's really important. Last thing here, as the GDP got revised lower, what also got a hit? Well, this is important because it tells us a clue. What got hit was copper, right? Dr. Copper, Dr. Economy. Well, boop, down 3%. That's not a good sign. And then we look here and see that oil, again, oil is needed for economic activity, also down by about 1.7%. But yields actually went down today. Why? I think people are worried stuff is going to start breaking. All right, that's it for today's video. So if you want to subscribe, please do that on the left-hand side. If not, come hang out with me at 9:15 and 9:30 a.m. Thank you so much. I'll see you on the next video.